Good evening. This episode of the Intraday Price Action Recap is being brought to you by the Smart Money Manuscript. Hello, my name is Timothy Leroy Sr., and I'm the creator of the Smart Money Manuscript. But Tim, what is the Smart Money Manuscript? The Smart Money Manuscript is your roadmap to financial freedom. Inside this powerful course designed to transform your financial future, I've meticulously condensed over 1,000 of my public YouTube videos into 40 highly efficient lessons that span just 2.5 hours. This course is strategically designed into 4 phases to help guide your learning in the most logical and effective way possible. Phase 1 lays the groundwork, covering essential financial literacy like budgeting, banking, and taxes. In phase 2, you'll move beyond the basics, learning about brokerage accounts, figuring out how much you need for your own individual retirement. You learn about how to do fundamental research on companies, and you'll also learn how to conduct technical analysis by looking at stock charts. Phase 3 empowers you to build a robust portfolio and leverage your capital using advanced techniques like options and futures, and it also teaches you the importance of backtesting your strategies. Finally, phase 4 takes a deep dive into the advanced ICT concepts, giving you a professional edge. Each lesson includes a short quiz to help solidify your understanding. By the end of this journey, you'll have the confidence and tool that you need to make intelligent investing decisions, manage your money without fear or ambiguity. So if you want to be a long-term buy and hold investor, if you want to be a swing trader, if you want to be a day trader, if you want to trade stocks, if you want to trade options, if you want to trade futures, the Smart Money Manuscript is for you for $69.99. Yes, $69.99 for all of this here. Click the link in the description below to take advantage of the Smart Money Manuscript. How y'all doing, man? How y'all doing? Good evening, everybody. If this is your first time tuning into Tim's Tidbits, please allow me to say welcome. If it's not your first time tuning into Tim's Tidbits, I still want to say welcome. But I want to give you a nice hearty, well, thank you for always tuning into Tim's Tidbits. If you don't know who I am, no, I'm not a bull. No, I'm not a bear. I'm a beast. My name is Timothy Leroy Sr., a.k.a. Haranya Grande. That just be Big Spider, you know, hablo español. And you're in tune to another episode of the Intraday Price Action Recap. Yeah. I was looking at the YouTube studio, whatever you call it, and it was telling me, I saw some over there talking about dual stream vertical to make it go automatically to the shorts feeds or something. Let me go over there and see if that's working right. I want to see if it's showing it vertical too. Come here, clickety click, click, click. Y'all bear with me. I be seeing new stuff and I be getting all caught up. Man. Talk about little booty Judy. All I want for Christmas is, I'm assuming she talking about some tail, because it say all I want for Christmas, and it got like a little skinny lady standing there. What would I tell you about my algorithm? She say all I want for Christmas. Talk about little booty Judy. If you catch this fish, kill it immediately. What kind of fish is that? I'm sorry, y'all. I had got caught up. I had got all the way caught up. Let me see. I'm supposed to be checking this. Okay. It say that it's, oh yeah, it's actually up there. It's up there streaming. So when I go full stream, okay, you can't see me in the middle. I probably need to figure that out if I'm gonna do that. Yeah, I probably need to figure that out if I'm gonna do that. Cause I go full screen like that. Oh, it can. Oh, you can see me right over there in the corner. Let me see what it look like when I just show my chart. When I just show my chart over there. All right. When okay, I just see right there, this portion right here. So turn my dot on, turn my fancy dancing. Oh, it's delayed. It's delayed for real. So right here. All right. So right there, that area right there is where you can see it. Y'all like, Tim, you taking up too much real estate for the vertical. Taking up too much real estate for the vertical. All right. Okay. So now that I see that there, how that's going. But when I'm in the middle, it got me dead in the middle. So I'm good to go. All right. I kind of like that. I kind of like that. Anyway, who we got up in here today, man? Y'all do me a favor. They say the algorithm like when y'all hit the like button. So hit the like button for me. And if it's your first time tuning in and you ain't subscribed to this channel, hey man, do your thing, man. I said in 2026, I was gonna start saying all the YouTube stuff. Hey, hit the like button, how Corey can't you say slice the like button? My kid be Samurai slice the like button. Slice the like button, hit the like button, hit subscribe, share this with somebody who you think might get something out of it. You know what I'm saying? Who we got up in here? Well, I'm trying to see who we got up in here. Y'all let me know. Did the algorithm send you to the reset line today? Did price action send you to the reset line today? Price action was so doo-doo this morning. I said, you know what? I am not touching this with a 20-foot pole. It used to be a 10-foot pole back in the day, but I said, I ain't touching it with a 20-foot pole. I got up. I went to the gym. I exercised. I went and got me a sandwich from Jersey Mike's. I came home, looked at the afternoon session, saw that it was doo-doo again. I went and got on the couch, started looking at Stranger Things, fell asleep, woke up at about 5 o'clock, came in here, set up the live stream. What about 5:30? Came in, set up the live stream. You know why? Because today is just January the 5th. It's the first full trading week of 2026. Today is not going to make or break my trading career. It's not going to do it. My brother asked me today, he said, Tim, did you know what I'm saying? You hit any licks on the stock market? I said, nope, I didn't. I came to the gym. You know why? Because when you see that price is doo-doo, no matter if it's beautiful for somebody else, leave that doo-doo on the ground. Do that doo-doo like that gorilla did that doo-doo. Just flick it away. Do y'all know? Let me see. Do I got that like y'all probably can't see it on my phone, but that gorilla flick that doo-doo. That gorilla set up that gorilla doo-doo. And that boy, once he doo-doo, he turned around, he flicked that doo-doo away. You gotta flick that doo-doo away, man. I ain't got the gorilla doo-doo no more. I ain't got the gorilla doo-doo no more. I know I sent it to somebody. Who did I send the gorilla doo-doo to? Did I send it to the group chat or did I just send it to the Info video. Okay. What else? Background info. Hey man, they done changed the thing. They done changed it. You can't see the videos no more. You can just see like the links and the photos. Man. Oh, there it is. See, I know y'all probably can't see. Y'all probably can't see this. Dude got away when he finished. Y'all probably can't see it. But take the squat. What turn around? It's too. Hold on. Wipe off the finger. Darken it down. Yeah, probably. I'm about to send it to him. Can I send it to? Y'all know how I get squirrel. Uh-oh. All right. Put it. Squirrel. Watch how this. Let me see. Private Discord. Main chat. Main chat. See it. Main chat. They say, what's wrong with that boy? They gonna be like, oh, you can't monetize that video because you using somebody else's content. You can't monetize that video because you using somebody else's content. All right. They said, what's wrong with him? Grown people should act like that. This how you supposed to do. This what you supposed to do right here. When you see them doodle on the ground, you turn around, you say, get out of here. When price action is doodoo, if price action is doodoo on the day, you turn around, you get up out your chair, and you turn around and you look at that price action. I want you to get up, or you turn around, look at that price action, and say, they say, what's wrong with him? They say, what's wrong with him? What's wrong with him? Their price send you to the reset line today. Their price send you to the reset line today. If price sent you to the reset line today, don't feel bad. Don't feel bad if price sent you to the reset line, because price was due today. All right. When price is not just moving like in a low resistance liquidity run fashion, right? Damn, you are silly. When price is not moving in a low resistance liquidity run fashion, right? You got two choices, right? You either do like I did, sit on your hands and say, hey, man, I ain't fooling with this. Or you play the range. You play the range algorithmically, right? And when price, let me ask y'all a question, right? Because we talked about this all the time now. We talk about this all the time. If price is ranging, right? If price is ranging, having deep pullbacks, deep retracements, whatever you want to call it, where are we anticipating price to retrace to? Where are we anticipating it to retrace to? Talk to me. I ain't even looking at the chat. I want somebody to talk to me. Where are, if we get in deep retracements and its price is ranging, it's not just blasting off and in a trend. It ain't trying to leave outside of a range. You hear people all the time say, hey, buy the tops sell the tops and buy the bottoms. They say that all the time. But what are we looking at to participate in these type of ranges? Where are we anticipating it to retrace to?
A previous high or low?
I mean, we always wanted to go to a previous high or low, right? That's what a liquidity be. But if price is not if it's not, it keep going toward that high and turn it around, going toward that low and turn it around, right? It may peak above a high and come back, never make it to a low, or it might peak below a low and come back and never make it to a high. But if we're playing the range, right? If we're playing the range, what are we anticipating price to go to? For a deep, we talk about it all the time. For a deep retracement, we anticipating price to come back where?
Order block or a rejection block.
Order block or rejection block. Check out Jim pulling up with the hard hitting answers. All right. We anticipated to come back. We're anticipating to go all the way back there to that order block when it's just ranging. You looking at price move back and forth, we're anticipating to go all the way back to that order block. Now, if you're anticipating to go all the way back to an order block, right? Now, what can you do? You can drop down to a lower time frame than that order block you anticipate price to go to. And then guess what's going to be down there? Some price structure where you can now devise your entry. You can enter in off of a fair value gap. You can enter in off of a turtle soup. You can enter in off of whatever you want to enter in off of, and then ride price back down or back up to a certain liquidity point, to a certain this on its way to that order block where you're anticipating it to go to. Just like when you're anticipating it to go to that liquidity point inside of a low resistance run, when prices just expanding, retracing, and delivering, or expanding, reversing, retracing, then delivering, right? You expect it to deliver to that high, deliver to that low. All you got to do is just adjust your focus on this higher time frame and say, I want it to deliver to this order block because we're ranging. And so now that I anticipate it to deliver to that order block, it don't have to get to the order block. All it needs to do is go toward that order block. And as long as there's enough range in between where I am in the discount buying and where that order block is in the premium for me to take my pound of flesh, I'm good to go. All right. But if you're not that advanced with the concepts, take your left hand, put it on your chair. That's my right hand. Take your right hand, put it on your chair. That's my left hand. And then sit on them. I forgot to shout y'all out, man. We got Lump in here. We got Rhonda Green in here. Y'all heard from Jim. I'm the biggest bird. We got light-skinned Deborah in here. We got Seawalk in here. We got Joe up in here. We got Yolanda in here. We got somebody named Shatter in here. I've never seen the name Shatter before. Shatter, if you've been here before, I truly jollipize. I just don't remember seeing that name. But if it's your first time, thank you for tuning in to Tim's Tidbits. We got Sam B. Song. Sam B. Song said, "What up, Tim?" Sam B. Song said, "What up?" like they know me. Sam B. Song, again, if you've tuned in before, I truly jollipize. Just don't remember that name. But welcome back. We got Honey up in here. We got Valentine. We got Tyreek up in here. We got Kim up in here. We got Jaquan up in here. Jaquan said equilibrium. Jaquan, equilibrium is where we anticipate price to come back to at a minimum, even if it's in a low resistance liquidity run. Low resistance or high resistance, equilibrium is the place where you want to see it come back to at a minimum. Who can tell me why equilibrium is the price? Equilibrium is where we want to see price come back to at a minimum. Why is that? Why do we want to see it come back to equilibrium at a minimum? What is special about equilibrium?
Because that's fair value.
Equilibrium is fair value. I need me a soundboard. All y'all big money traders out there that's making a whole lot of money, man, give me a soundboard and send it to my P.O. box. I will very much appreciate it. I want to be like Wall Street Trapper. You know, in Wall Street Trapper, he be hitting them little buttons on the soundboard. I want a soundboard. If you out there Grubhubbing, making all that Grubhub money, get a soundboard and donate it to the new TLR. Send it to my P.O. box. I can't remember my P.O. box number. I think it's 6223. No. What is my P.O. box number? I can't remember my P.O. box number. That tell you how much I'll be use my P.O. box. I can't remember my P.O. box number. Is it 6332? 6223? I don't know. I don't know. For real, for real. No, that's my, oh, that's the phone number. I don't know. Oh well, I'm tired of looking now. What was I saying? Price action. Did price send anybody to the reset line today? Did price send anyone to the reset line today? If it did, don't feel bad. Don't feel bad if price sent you to the reset line today. Price was rather difficult. Please review your email from this important health update for the school district. Now it's time to go back to school tomorrow. Here come the text messages and the emails. Sorry about that, y'all. Squirrel. Here's today's price action here. Right, this purple rectangular shape down here, towards the bottom there. That's the new week opening gap. Starting right over here. I ain't got a whole lot of real estate on there for the vertical video. I ain't got no real estate at all on there for that vertical video. All right, there you go. Let me see where I got to get my boundaries together. I'm sorry, y'all. I need to get my boundaries together. Let me get my boundaries together so I know where I can take stuff to. Boy, no real estate for the vertical. All right. Now they got my boundaries together. All right. So right over here, right, starting there at 6 p.m. That's where we started today's trading. This purple box here, purple rectangular shape at the bottom there, that's our new week opening gap. We had a bullish new week opening gap, meaning we closed down here at the bottom of that purple box and opened up here Sunday night at the top of the purple box. As you can see, right, it started out just being a slow walk up. Right? Once we got over here into our 9:30 session, the slow walk up stopped. Right, we opened at 9:30. We came down, pushed up, came down. Right, so we just stayed right in this area here for the whole New York session. Right, the entire New York session. Now, when you're studying price, right, make sure when you're studying price, you're not just looking at, oh, it came to this fair value gap. Oh, it went to that breaker. Oh, it swept liquidity and then did this. No. One of the things you want to pay attention to, there's many things you want to pay attention to, is you want to look at price in the sense of I'm watching this in real time. So I need to understand how long it's taking to do things. Okay. How long is it consolidating? How long is it expanding? Is it expanding through an entire session? Is it consolidating through an entire session? What is it doing? Right. For example, looking at price from yesterday, this is our midnight open. Right. So our Asian session, right, it goes, let me get a little box here. Right. So we got 8 o'clock here, over here to like 1:30, 2 o'clock. We checked this before. I think it was it 1:30, 2 o'clock, or was it 3? Let's go back and recheck it. Let's go recheck it because we checked this before and we looked at like the sessions. All right. All right. So it's Asian futures that generate from 7 to 4 a.m. Okay, so the Nikkei go from 6:45 to 2:30, and the Sydney starts at 5. So 2:30, right? So I go over there to 2:30. The Nikkei, that's the Asian future markets. I was looking for the actual Asian That ain't what I want. It is so 9 to 4. All right, so it's from 9 to 4, right? And the trading hours are from 8 to 3. Okay, so from 9 to 4, and let's go to time is Tokyo, right? So time is for Tokyo. So 9 a.m. is 7 p.m. and then 4 is 2. Okay. 4 is 2. So from 7 to 2. Yeah. Yeah. So from 7 to 2. All right, because they said it from 9 to 4. So from 7 p.m. to 2 a.m. All right. Okay. You know what I could have did? I could just use this right here. So let me go to my Tokyo session and then gonna go from 7 to 2. And then London, we're gonna do 3. 8 to 4:30. All right, it's 8. So 3 to 4:30, 11:30. Right. So yeah, I knew that, but I just wanted to check it. Three to 11:30. All right. So now, all right, the yellow portion here, the yellow portion there, that's our Asian session. That's the entire Asian session right there. Right. Looking at the Asian session, right? Do it look like we did a whole lot in the Asian session? Right. What does the Asian session look like it did? Engineer some liquidity, right? All it did was pretty much trade inside of a range for the entire Asian session. All right. London session. The London session expanded. Right. Can you see the difference between the London session and the Asian session? Right. Asian session. All right. Then London session. Right. Can you see the difference Can y'all see the difference between the Asian and the London? All right. Now, the New York session falls, all right, it overlaps with the London session. New York is from 9:30 to 4. Would you say 4:15? Because it'll go all the way to 4:15, but 9:30 to 4 is the official time. All right. So now, all right, get this overlap here. See inside that overlap section right there, right? Inside that overlap section, price got ugly, all right? And guess what? All this ugly price action inside this overlap, guess what that is? That's the New York morning session from 9:30 up until pretty much this right here is 12 o'clock right here, right? That's 12. This is 11:45. That's 12 right there, right? So that's 11:30 there. Wonder why it's not highlighting that whole candle. It's always stopping right at a thing. So, because that's when it closed. That's the end of it right there. So it's not going to incorporate that candle, right? So that's all the price action there, right? So for the bulk of the morning, right, we're inside that ugly price action, right? We're inside that ugly price action. But looking at the day as a whole, right? Looking at when you step back and look at the day as a whole, that's why I started out talking about this, okay? You step back and look at the day as a whole and you say, okay, we during the Asian session, price just consolidated, right? During the London session, uh-oh, I'm trying to figure out a way I can drag this around without having to click on my tools down here. But during the London session, price expanded, right? During the New York session, right? We started to retrace, and then we delivered in the New York morning session. Then after that, after we delivered, right, we started to pull back off of that high. Okay. Even in the midst of ugly price action, right? You can see the algorithm being the algorithm. But you have to understand how to interact with it. If it's not, that's what I was saying. Because when you have a session that does nothing like this, right? You anticipate the next session most of the time, not all the time, but you anticipate that next session to be a little bit more fluid, right? And when you have a session that's fluid like this right here, you anticipate that next session to be a little bit wonky. We're inside this right here. Why didn't that go all the way to 4? What is that doing? Did I not change that? Right. Okay. So here we go right here. We open up right here at 9:30. Right. All right. So looking at the day as a whole, right? Talk about it. Have a session that does pretty much nothing, right? So we anticipate the next session to be a little more fluid, a little more fluid. And when you have that session that's fluid, we anticipate that next session to be a little bit more nothing, a little bit more nothing, right? Because we opened here, went up, came back down, and then we closed here. So we got a little, say a fat little candle with a wick on the top and a wick on the bottom. For that session right there. Like, Tim, what's the point of all of this? Because it's good to be able to see price. It's good to be able to see price as a whole. It's good to be able to see price as a whole. I'm like, Tim be doing too much. Nobody care about all that. All right. Not, uh-oh. I took the wick from up there. All right. So, all right. When you draw it out graphically in your mind, right? When you draw it out graphically in your mind, this is what the day looks like. throughout the sections. Right. The Asian session, right? And that's just the times, the Asian session times, right? Not counting, not counting like the extra stuff for the futures, just counting the actual opens and closes. All right. So that's your Asian session. Right. Started out here. Okay. Price pretty much was consolidating. Right. Price was pretty, you can see price was consolidating. All right. Over here, we can see price was pretty much expanding. Right. And we see over here, price was pretty much consolidating. All right. So when you are getting ready to engage with price, right? So if you trade the Asian session, you know, what was price doing prior to coming into the Asian? What can I anticipate this session to be? Right? It's not going to be 100% of the time, but what can I anticipate this session to be based off the historical trading of this session? Is this session usually a range bound session? Does this session usually expand, right, by nature? And then what did price do coming into this session? Was it expanding coming in? Was it consolidating coming in? Was it retracing coming in? What was it doing coming into the session? Understanding what was price doing prior to my session started. And then, like we say, when we have a session that does pretty much nothing, we can typically anticipate the next session to be a little bit more fluid. And if we have a session that's a little bit more fluid, we can typically expect the following session to be pretty much nothing, right? Does it happen like that 100% of the time? No. But today, right, is a good example of the Asian, it's pretty much nothing. The London pretty much expanded, and the New York session was pretty much nothing. Right? And before I even drew this out, right, I said the price action was boo-boo this morning, and I went to the gym. I came back this afternoon. I said the price action was boo-boo, and I went and got on the couch and watched TV. Right? And then when you sit back and look at it in hindsight and draw it out visually, you can actually see exactly what I was talking about. Now, were there trading opportunities inside all of these sessions? Yes, it was. Yes, it was. Right? Because what was the first thing I asked about when price is in a range? What do we anticipate price to come back to?
It's 005.
0005. What?
An order block.
Oh, okay. All right. I heard something about some 0005. Like, what? Okay, so our Asian session here, right? Getting another session, right? We just consolidate, 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 right? We expand up here. Okay. Now we're trading inside. We're not moving in the range. We're not moving in the range. Okay. So now, right, based off of this area here, as we expand up right there, right, what do we say? When price consolidates and expands up, the last down close or series of down close candles at or near equilibrium is your order block, right? Close enough. Turn this off so I ain't got to go back. This is a 15-minute chart, right? So when we expand up there, right? So we go up here, this is our order block. We form a fair value gap there. That fair value gap is part of confirming our order block. So when we come here, let's put a line there so that we can understand where we are in price. Go down. All right. Go down to a 1 minute chart here. All right. So we go down to a 1 minute chart there. Now, this right here is once the fair value gap exists. The fair value gap and the order block. The order block, when we offered the opening price of those down close candles, and then the fair value gap is here once this candle closed. All right. So now we have been ranging, right? This right here is our 15-minute order block, right? After we came up, right? Set that high, right? Closed that candle, came down, took out that sell side, retraced back up into, right, a bearish order block, bearish propulsion block, right? So we retrace up to an order block, traded down to a higher time frame order block, a lower time frame order block, propulsion block. See that? Order block to order block. Oh, Tim just be making stuff up. That ain't how it work for real. Hey, it's on your charts. Take it or leave it. Free advice from me to you. Free advice from me to you. Take it or leave it. Take it or leave it. All right. Did I not say that's how it works? Did I not just go pick a random session and do it? Hey Tim, what's that stuff on your charts? Let's go see. Right here. Come down here. That says first fair value gap of the 7 a.m. opening range. What does 7 a.m. start? Somebody tell me, what does 7 a.m. start?
Believe it feels on.
Yeah, pre-market, kill zone, yes.
Pre-market, yeah.
Yeah, starts pre-market, right? 8 a.m. Right. Over here, 9 a.m. Right here, 9:30. Right. So I got the first fair value gap from 7 o'clock in the morning, starting pre-market. The next hour, 8 o'clock. The next hour, 9 o'clock. Our New York Open. And then if I'm really still interested, I'll look at 10 o'clock. Right. I look at every hour. I'll look at that first presentation. I look at that first presentation based off of displacement. All right. So that's what those are on my charts. All right. Now, if we squash this up, we got to make it pretty. But if we squash that up, does it look like the algorithm know that I drew those boxes on there? It looked like the algorithm like, oh, Tim put some boxes on there. Let me trade to them boxes. Do it look like it knows that I drew them? Let's zoom it out a little bit and see. All right, stretch this out. All right. So looking at from when it was created there, right? Does it look like the algorithm cares that that box is there? Right? And that box right there. Right? There's a fair value gap there. There's a fair value gap there. And there's a fair value gap there. But why did I pick that one right there? Right? Why did I pick that one right there? Right?
That was your first one of the session?
Yeah, first one of that hour right there. That's the first presentation of the hour with some displacement, right? I ain't looking at no little itty bit. I'm looking at the ones with this first presentation with the displacement. And look at that. Look how price is reacting there, right? Trade up, bodies are staying inside of it, right? We come back over here, can't take that high. Trade down, take out liquidity, right? Then we retrace back up, right? Touch it one more time, trading into that SIBI right there. But we touch it one more time, right? Then we come over here to the next hour, right? And that's the first one from that hour. Then we trade back up here, boop, hit it one more time, right? Then we come down, right? Stop there on this one here, around consequent encroachment. Then we drop below it, drop all the way down here, taking out liquidity, coming down there, doing something else that I ain't about to go back and look at right now, but trust me, it did something, because when the algorithm just don't stop for nothing, right? Then we come back up here, right? And as we come back up, as we drop down through it there, right? As we drop down through it there, right? We create this SIBI right there, right? We create a SIBI coming down, right? Trade down into that fair value gap. Then we come back up and create a BISI going up. So now we've created a balanced price range right there. But not only are we creating a balanced price range right there, we're creating it inside the first presentation from this hour. And if we look right here, this is the first SIBI that we create before we drop down. And this is the first BISI that we create when we come back up, right? With displacement, right? And it's all happening inside that first presentation from 8 o'clock. Right? Then we come up here, right? This is our first presentation after 9:30. I mean, after 9 o'clock, that's 9 o'clock. Then we break outside of this range right there. That's actually a suspension block, so it should be highlighted up to here, right there. Actually, a suspension block should be there. All right. Lock that in, right? We go up, use it there, take us all the way back up there, take out some liquidity or something over there. It did something, trust me, right? Then we come back down, right? Drop just below it and tap into that fair value gap there, right? Retrace all the way back up, get an immediate rebalance of this huge drop down, right? Coming all the way back up to that volume imbalance, that immediate rebalance. Then we drop all the way down, right? Hit that 7 a.m., right? Then we come back again, come down, hit that 8 a.m., retrace all the way back up, come down, respecting the inversion, right? It's respecting inversion because we traded back up, but we're closing below the lower half because we closed down below it. So now it's an inversion, but we are closing respecting that first presentation as the inversion fair value gap, right? Right. After we come down, sweep that liquidity, right? Look at the bodies respecting the consequent encroachment of that first presentation from 8 o'clock, right? We come back and we close back above that 7 a.m., right? Come up, come back down, look at the bodies respecting the upper quadrant, I mean, the upper half after closing back above it. Yeah, very sloppy, sending people to the reset line, but look where the bodies are stopping, right? Where the bodies are stopping, right? Then once we come back up here, and then this is our first presentation after 9:30, right? Once we get back above it here, right? Trade back down into it after all this coming down here, respecting that there, trade back down into it, right? And we chop, 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 all the way back up to the top, right? All the way back, a lot of back and forth, back and forth, back and forth, right? But the algorithm is being the algorithm. If you know why you're putting stuff on the charts, right? If you know why you're putting stuff on the charts, the algorithm will refer to them. And when we come back this afternoon, right? That's that first presentation from 9:30. That's that first presentation from 7 o'clock. We didn't hit the one from 8. Oh, wait a minute. Yes, we did. Boop. Right. And come back up. 7 o'clock. Swipe liquidity. 9:30. All right. Right on that. And then we close over here somewhere. Right there, 4 o'clock. All right. Even in the midst of chop fooey, slewy days. And then going back to what we was talking about also, New York morning, hot plate of mess. All of this, bunch of back and forth all throughout compared to New York afternoon. It's still a lot of back and forth at these areas of distribution, right? That's expected. These are the areas of distribution. We're consolidating in that engineering liquidity, right? Engineering liquidity. But look at the movement in between them, right? Here, look at the difference between this, right? And then once we got up here to this smart money reversal right up here, look at the difference. All right. See the difference between the buy side and the sell side of the curve? Right. This portion, the morning session versus the afternoon session. When one session is pretty much ugly, the next session will tend to be more fluid. Does it have to be? No. It don't have to be, right? Although this was much more fluid than this. But when I came in and was watching price over here from 1:30, about 1:30, 2 o'clock or so, up in here, right? It didn't offer me anything that I wanted to participate in. Why? Because when we come over here at 1:30, we start selling down here, right? And where are we once we get down here? We're down here in a discount, right? We're down here in a discount. So if we're down here in a discount, I don't want to sell in the discount. I want to buy in a discount, right? And we've been in a sale program all this time. So now when I come to watch price and I'm down here in a deep discount, right? So when I come to watch price and I'm down here in a deep discount and we've been in this sale program this whole time, right? I'm not trying to sell anything down here. Okay. And then it ain't giving me nothing. It ain't giving me no buy signatures that I want to buy. So this is why I said, hey, by the time, yes, this right here is a lot more fluid than this right here. But at the time when I came to watch the charts, it wasn't a time to be selling, and it didn't offer anything for me personally to buy. So, like Kenny Rogers once said, you got to know when to hold them, know when to fold them, know when to walk away, and know when to run. At least I think that was Kenny. Was that Kenny or Willie? Who was that? That was Kenny. I think that was Kenny.
It
Y'all
was
don't.
Kenny.
Hey man, I think that's all I got, man.
So when you're looking at that, I guess I see the market maker models more easily. But would you be, again, just watching price to see if it completes the model in the same day? Like when you said at 9:30, it made that other smart money reversal, and then at noon did another smart money reversal. I guess you'll just be watching to see if it completes. I guess my other question is, do you have incomplete market maker models, I guess, with manipulation maybe?
Um, how can I let me
I guess it's a loaded
let me choose
question.
my words let me choose my words wisely, right? So when it comes to market maker models, right? You can have an incomplete market maker model based off of a higher time frame, but a completed maker model, the completed market maker model based off of a lower time frame. Because the idea of the market maker model is just to engineer buy side or sell side liquidity, go and take out some opposing liquidity and come back to that liquidity that you engineered. That's the whole premise behind a market maker model, right? So for this time frame here, right, I got liquidity here. I trade up, take out liquidity, then I come back down and take out that liquidity right there, right? In the sense of a market maker model, that's a market maker sell model. That's complete, right? But if I'm looking at it from a higher time frame where this is the engineered liquidity, I still haven't gotten back to that yet, right? I don't know if it actually hit it later in the day, but based off what I was, yes, it didn't. All right. Right. So looking at, like, if I'm looking at it as, oh, this is the liquidity of my market maker model, right? I haven't come back to it yet. Okay. But I have completed market maker models inside of here, right? Inside of there, inside, you know what I'm saying? Here. I have like all these market maker models that I have completed, but I still have one here that's not done. So it can be incomplete, but it's not about, oh, we don't always complete the market maker models. No, just remember the market maker models are about where was the liquidity initially engineered. That's your initial consolidation. Where do we go take out opposing liquidity? That's your smart money reversal. And then where do we come back to that initial consolidation? That's complete in that market maker model. And every expansion and retracement, right? Inside every expansion retracement on a lower time frame, there's a market maker model that's being like completed, right? You got an expansion to the downside of the retracement on a higher time frame. On a lower time frame, there's a market maker buy model in there that was completed, right? You got an expansion and retracement on a higher time frame. On a lower time frame, there's a market maker model, market maker sell model in there that was completed on some time frame, right?
Yes.
And
So then
yeah,
should you then just watch the higher so that you don't get confused, keep the higher time frame narrative in
always,
perspective always. Yeah.
always,
So you don't get
always.
faked out. Okay.
You already know the answer to that. You always keep
Yeah.
the higher time frame narrative and perspective. And just like I was talking about today, what did we start out talking about in the beginning when we got high resistance? When we're working inside high resistance, what's the names? Right. When we're working inside high resistance, what runs, right? What do we always talk about? What we saying that price? We anticipate price to go back to where? All right. We anticipate price to go back down into order blocks, right?
And I just came here and I just put lines on all the lows, right? It's too many lines. Got making me go crazy, right? So we come here. Right, this right here was our 9:30 open right there. That's why I peaked that low, right? 9:30 open right there. All right. If we follow this line back, what do we go back to? We got an order block and a propulsion block right there. Came back down to an order block. All right. Then if we come over here, you had a more shallow retracement here initially. All right, shallow retracement here. You got an order block there, but it came down into an order block there, order block there. So you got an order block and a propulsion block right there, right? Also has an order block right there, but you can see it's more so respecting these because it's digging very far through that right there, right? It's digging very far through this order block. But if you look there, you can see where price is really respecting the order blocks here. All right. That got a more deep run right there. If we look back here, we came down inside of a rejection block right here, but there is a propulsion block and an order block right there. Coming right down into the order block, right? Coming back and reclaiming that order block, reclaiming that order block. All right. So we came back, reclaimed that order block, came back, reclaimed that order block, came back, reclaimed that order block. All right. Then y'all get the picture. Y'all get the picture. Y'all can see what's going on. Right. Y'all can see what's going on. Right. Coming down here. We went to inside this order block here. Right. During this little consolidation. Right. We came down to on here, we was actually coming and sweeping liquidity. Right there. We're sweeping liquidity, but where do we stop at? Inside this order block. And the reason why I say we sweeping liquidity is because we're right here inside this area of accumulation right there. So we're consolidating here, right? We drop down, take out the sell side, then we rally up, right? And then we come back down here, right? We trade down into the rejection block, staying inside of the order block, right? Y'all can see it. Y'all can see it. When you're inside these big sweeping, deep retracement days, right? Like they always say, when they say sell the tops and buy the bottoms, right? You look for it to come back to those order blocks and rejection blocks and look for your opportunity to participate.
Okay, thank you.
Go ahead.
Oh, I said thank you. That makes sense.
But always keep the higher time frame narrative in perspective. Right? Always keep the higher time frame narrative in perspective, and then you always want to, like for example, for today, right? We'll look at today. I had that right there on my chart and my quadrants for the day. That was the high of the day. And that was the low of the day. That's the week, but it was the same price. So this is my quadrants for prior day's range. This right here was my premium PD array that I was watching, right? Why am I looking at that PD array right here? Right? Why am I looking at that PD array? Somebody tell me why I'm looking at that PD array right there.
Because it was the first? Okay.
Yes. That was the first PD array, first imbalance in this displacement lower right here. Right? So, and the only other imbalance in this displacement lower right here is a bearish fair value gap. But where's that bearish fair value gap located at? This is equilibrium of that range right there. Where's that bearish fair value gap at? Hmm. Hmm. Hello? Anybody out there? Nobody?
In the discount.
The discount. So I ain't gonna waste my time marking out that bearish fair value gap that's in the discount. Because if I'm looking at a bearish fair value gap, I don't look at a bearish fair value gap that's in a premium. And what better bearish fair value gap to look at in the premium than the first one that was created when it's the only one that's up there? Not only is it the only one that's up there, it's the first one, and it's in line with the upper quadrant. Because when we looking for reasons to buy or sell in the future, we're looking back along these quadrants for confluence. So that's why I got that on there. I want to see how price reacts when it gets there. Does it act bearish, or do we push through it and use it as an inversion and continue to act bullish? So you always want to have reasons why you got stuff on a chart. Right. And then if you notice, looking at this right here, right? Looking at that right there, not only is that the first one in this displacement lower, right? It's right over there in conjunction with the first one in this displacement higher. So now that this first one that displaced lower, what did that create? That created an inversion fair value gap, high probability. Why? Because that's the first one that was created before we came up here, took care of some business, and came back and got that change in the state of delivery. Right? So this one right here, during, right, a important time, it's around a macro time, because it's like a 3 a.m. candle right there, right? Very important time, start of a session, conjunction around a macro time, all this right at top of an hour. Then this one over here, same thing. It's 10 o'clock. Start of, it's the top of an hour around that macro time, very important time, right? Creating these at very important times, and they're playing off each other, right? So this is an area that I really want to watch because of these PD arrays there. And then Michael gave us a little bit more insight about those first. What happened up here above these highs? We got that long wick, then a rejection off of there. What happened up there? At that smart money reversal. What happens at a smart money reversal?
Turtle soup.
Turtle soup. And what did he say? That first imbalance after the turtle soup.
Bring it out. It'll be an important level.
Extend that out. And Mike, he was like, extend them out for 20 days. when you get a PD array, when you get an imbalance after a turtle soup, extend them out for 20 days. Extend them out for your 20-day look back. That's what he said on his video. Extend them out for you. Now, price is fractal. He was looking at 1 minute PD arrays. But price is fractal. And PD arrays don't go stale. So whenever you price gets in that price range, we trade up. You want to understand, why is he reacting here? Because there's something that the algorithm left in the past, right? So with all that being said, that's it. That's all. That's them the only PD arrays I was looking at on the chart from our pre-market analysis, outside of marking up some liquidity, but that's it, right? And then we look at what price did today. Traded all the way up to that upper quadrant right there at that PD array, then start to pull back down toward equilibrium. All right. So as we set the low, price started coming back up, got above the lower quadrant, came down, used it as support, went up, got above equilibrium, came down, used it as support, went up, got up to the upper quadrant, right? Once we got to the upper quadrant, hit that order block, what do? Started getting the retracement, right? Because whenever we get up to the upper quadrant or the lower quadrant, a lot of times what we anticipate, a deeper retracement. A deeper retracement. Y'all hold on for a minute.
Hey, Tim, I think you muted.
Okay, hear nothing I'm saying. Hey, I was just saying that's it. I was just saying, I did a lot of talking and y'all ain't heard nothing, man. But it ain't nobody said nothing. I'm sitting up here just talking. Ain't nobody said nothing. Anyway, Wednesday, we got tape reading. I can't remember who volunteered to go first, but somebody volunteered. So somebody gonna be leading a tape reading on Wednesday. Either the person that volunteered or the person that's getting voluntold. It's 2026. We sprinting, baby. We sprinting. It ain't about being right or wrong. It's about reading a price action, committing to something, and then looking to see, hey, did I miss something or did I see everything correctly? That's what it's all about. All right, man. Till the next time I decide to get on Al Gore's internet and share my thoughts on this thing they call price action. It's your boy Timothy Lee Rogers Sr., aka Aranya Grande. That just mean big spot if you don't hablo español. Y'all be safe out here in these trading streets, man. Gone.